Hello, everyone, and welcome out as we get prepped for the FOMC meeting and the CPI data. It's kind of a two for one. Let's jump into it and talk about what's going to happen and how to be best prepared for what's about to happen in the markets.
Disclaimer. This video was created for professional Forex and crypto traders. Maverick Currencies is a proprietary trading firm that employs professional traders around the world. Our traders trade firm capital and keep 70 to 80% of profits they generate. All trades and analysis in this video are for professional traders only. If you are interested in becoming a professional Forex and currency trader for Maverick, click the apply button in the video description.
So I'm going to start by pulling up our calendar here. And if we look at the calendar of events, two main events, both happening tomorrow early. We've got the CPI. The CPI data, you can see year over year, it's at 3.4%. And it's anticipated to have grown at 0.1, which is kind of a nice number. It's a slow uptick in CPI at zero point 0.1. If you were to annualize that, if you were to multiply by 12, of course, that only ends up being 1.2%. So that's a nice number. Hopefully that comes in as anticipated at 0.1. Core CPI at zero point 0.3. If we were to annualize a zero point 0.3 number, so these are monthly numbers. If you were to annualize that, 0.3 times 12, and you're at 3.6. Now, what's the problem there? Well, again, at 3.4%, the Fed's target is a 2% annualized inflation number. And at 3.4, 3.6, these types of numbers, you're 1.5% above their target, their goal, their mandate is price stability. And they really screwed up price stability. They screwed up inflation the first time around. So we want to see that. And the Fed, we want to see it coming down. And the Fed has said that they're data dependent, and they're really data dependent on inflation right now. They're weighing jobs versus inflation, and inflation has to be their number one goal and target because it's what they really screwed up. So we'll see what that comes in at. And there's no question the Fed already has the CPI data out ahead of us. They already know what these numbers are going to be coming in at, so it's not going to be a shock and a surprise to them. Then we've got the FOMC meeting. Now, the Fed meeting, expectations are for Fed funds to come in at unchanged at 5.5. That's not going to surprise anyone. That is not going to change. They are not hiking, they are not cutting. It's going to be all about the statement and the press conference. What kind of guidance do they give? Are they moving towards an easing cycle? Because remember, if we go back to last week we had the Bank of Canada, which cut rates by 25 basis points. We had the ECB, which cut rates by 25 basis points. So they want to be acting in concert with other central banks around the world. And we've moved into this easing cycle globally. But the Fed is in a little bit different area. The Fed is, first of all, the U.S. economy has been stronger than what you've been seeing in Canada and Europe and these other locations. And when we look at it from the standpoint of stronger economy here in the US, less reason to be cutting aggressively. Still sticky inflation, less reason to be cutting rates aggressively. So until something kind of goes wrong or something in the data really tells them that they've got inflation under control, what would be the driving force for them? And also you've got elections coming up later this year. So it's certainly possible that the Fed could cut rates once, maybe twice, but where they're at right now, they're just not in a hurry to do so. So clearly they're not going to do anything with rates at this moment. Now let's talk about potential trades and opportunities on the CPI or the Fed meeting. If you look to last week, we saw the US dollar jump up. And of course, that big spike, if I go back to our calendar and we look at last week, what was last Friday? It was the jobs number. And the jobs here in the US, we saw an uptick in average hourly earnings. We saw better than expected on the employment. and the unemployment rate, ticked up a little bit to 4%, but we had more jobs. And it was kind of this question mark of, well, if there's more jobs, not less jobs, if we're still strong on that point, remember the two Fed mandates like we just talked about, if jobs are strong or relatively good, but inflation's still a concern, less likely to be cutting rates. And on that news, we saw the dollar jump up. The US dollar is suggesting that the Fed is not cutting soon, not cutting quickly, and the jobs number is confirmation of that. And that's what the market reacted to. That has now pushed us, if we look at this pair of the dollar versus the other currencies, we're essentially right up at resistance. The 50 period moving average, the prior highs, you're in a little bit of a range bound type of dynamic because we could throw another line down here at the bottom end of the range as well. So you're in this trading range, but we've moved to the top end of the range. If we come into the shorter time periods, you'll see that the dollar has been on a strong trajectory to the upside. As we come in the last, while, we're high basing. These are bullish price patterns. The trend is up and we're basing sideways following a nice advance. So as we look at these shorter time periods, the dollar's got that upward push and that upward momentum. If CPI is going to be a driving force here, if CPI drops more than expected, one would expect the dollar to slide. If the CPI comes in a little hotter and inflation comes in a little hotter than expected, the dollar would be expected to advance because, again, it puts the Fed on hold. It means that that era of cutting rates is not beginning as soon, but we're right at that tipping point. We're right up against that resistance zone here. Now, if we were to look at some other currencies, I mentioned this in the currency recap yesterday. The Canadian dollar did not budge to the upside yesterday, even with oil advancing over 3.5%. That's not great price action. CAD continues to be weak. They're already starting to cut rates. British pound continues to be strong. So as far as best and worst, I kind of put pound as the better and CAD as the weaker. We could also go Kiwi on the stronger side as well as a little bit better currency, certainly. But pound is my favorite on the upside. CAD is my favorite on the downside. So if we're looking at dollar pairs, pound USD, if you want to play dollar weakness. So if you think the dollar is gonna fall, gonna sell off, gonna fail at this resistance zone, I like playing pound USD. We're in a little bit of a basing formation, but ultimately nice upward trend here in pound US dollar pairings. I'd be looking at this for an upside trade. Again, if we come into a little bit shorter time periods, you can see some pullbacks here, some deterioration that's happened recently back to the lower end of the range. But if we start to pivot up, it all starts to advance again. If we go to dollar CAD, I like this one more if you want to play the dollar to the upside. So here you can see the range that we had been in and we've broken out to the upside. This is probably my favorite of all potential trades is USD CAD on the long side. Canadian dollar just not acting quite right. So again, as you look at these chart patterns, we've got the upward trend, we've got the advance. Now we've got a little bit of a pause that's happening at this moment, but again, we're talking about trading this more into tomorrow. So maybe it'll even give us a little pullback, give us a little buying opportunity to buy the dip. But dollar CAD on the long side. As far as opportunities, risk, reward probabilities, we're going to be trading two events tomorrow, the CPI and the Fed meeting. And then after the Fed announcement, you got the Fed press conference. That really kind of gives you three different entry opportunities. At some point, I would expect to be long USD CAD for a trade. I don't know where exactly, but I would be looking at lines of support, opportunities, setups. If something triggers, something gives me a price pattern that I can take advantage of, I'll be pouncing on it. Hope you enjoyed this prep video. Have a great week, everyone. A great day tomorrow as we trade CPI and the FOMC meetings. We'll see you next time.